I'm Robin Gagnon.
And I'm Eric Gagnon of We Sell Restaurants. We started the nation's largest restaurant brokerage firm, We Sell Restaurants, over a decade ago. You can find us on our shows online at WeSellRestaurants.com.
We are also on your radio once a week with the restaurant industry's leading authorities talking about subjects trending in the restaurant business. Tweet your questions on any of our topics while we're on the air to our Twitter handle. It's at Sell Restaurants. You can also post on our Facebook page. It's facebook.com/We Sell Restaurants. If we don't get to your answer on the show, we will make sure and follow up with you on social media.
Our goal is to satisfy your appetite for acquisition, feed the need for restaurant reality, and serve up a recipe for business success. If there's a topic or question you'd like to see or cover on our show, beg your pardon, if you simply have comments pertaining to the show, you can send us on email. My email is eric@WeSellRestaurants.com.
Today, we're taking the restaurant industry's pulse. From sales performance to herd on the street nuggets, the show is focusing on heavy hitters like Darren Tristano of Technomic and Jonathan Mays of Franchise Times, who are giving us what's top of mind in the restaurant industry. What economic issues continue to pose challenges for this industry? How about opportunities? Is there still room for today's restaurant entrepreneur to launch a new concept and take it to the top of their game? Our guests will give us their opinions and analysis on the overall pulse of the restaurant business. Our first guest is Darren Tristano, Executive Vice President at Technomic. His firm is focused on expanding the food service industry knowledge base and sharing that intelligence with operators, suppliers, and other key players. Over the past 20 years, he's overseen the growth of Technomic's Information Services division. On Technomic's consulting side, Darren leads the company's restaurant practice, providing operator clients with actionable findings and insights. Drawing on this experience, Darren also puts Technomic's research findings into context, speaking frequently to the media and at industry conferences. Darren is responsible for industry tracking services and reports that food service executives rely on for market intelligence. He also serves as group publisher of Technomic's consumer trend reports and conferences. Darren is often quoted in trade, news, and business media, including the Wall Street Journal, the New York Times, USA Today, Los Angeles Times, Chicago Tribune, Forbes, Fortune, Fast Company, Nation's Restaurant News, Franchise Times, Restaurant Business, and numerous other online and print publications. He has made appearances on The Today Show, Bloomberg Television, Fox News, and MSNBC. He's a frequent guest of the NPR and Market Watch, and he joins us today on the Restaurant Brokers Show. Darren, thank you for joining us.
Thank you for having me.
Our second guest is Jonathan Mays. Jonathan is the editor of the Restaurant Finance Monitor, a monthly newsletter that offers unique opinions and analysis on the restaurant industry, delivered to some of the most influential movers and shakers in the food service. He writes an award-winning daily blog at ResFinance.com, and he is a senior writer at Franchise Times Magazine, a monthly glossy publication devoted to the franchise sector. A regular guest in a conference call series held by City Investment Research, his views on the restaurant industry have been quoted in publications including the Orlando Sentinel, Yahoo Finance, Denver Post, New York Post, and the Dallas Morning News. He is a regular speaker and panel moderator at conferences including the highly regarded Restaurant Finance and Development Conference and the National Restaurant Association Show. Jonathan, thank you for joining us today.
Thank you very much.
Okay, so great. Two heavy hitters. And Darren, I want to tee off the show with you today. Since you're focusing on expanding food service industry knowledge and sharing intelligence, tell us what kind of information is on the forefront of industry leaders' minds right now?
Today's industry leaders are trying to better understand how to grow in a very low-growth marketplace. Since the recession, we've seen quite a bit of difficulty for restaurant operators to grow their sales at the unit level and to build on profitability. What's changed over the last 5 or 6 years is that restaurants have gotten leaner, trimmed some of their fat, no pun intended, and done a better job of controlling the way they spend versus trying to get more customers in through the doors, which has been a difficult challenge. Brands like McDonald's are struggling with frequency, and overall the economics of today have limited the number of restaurant visits that American consumers have, even though they want to go out to eat more, forcing them to go out and spend less so they can continue to maintain the frequency they already have. What we've seen and what we're continuing to see is growth in the area of about 3.5% to 4%. And when adjusted for inflation on a real basis, it brings growth down to a very small level of often between 0 and 1%. So executives today are trying to figure out, how do we win share, steal business from competitors, remain relevant to consumers by becoming increasingly innovative, and overall, how do we expand our business and bring customers in through the doors?
That's very good information. And Jonathan, from your perspective, can you tell us what topics are your readers most wanting to learn about, what they're reading about, what they want to know about right now?
Yeah, well, it's really roughly along the same lines. You're seeing operators, concepts right now are operating more efficiently than they did before the recession. So they are opening up in less expensive leased spaces, such as strip malls and shopping centers and that sort of thing. End caps. They're not really building standalone facilities anymore. They are taking a lot of the fat out. You don't see as many drive-throughs, very few drive-through concepts, that sort of thing, and they're really trying to operate in a much more efficient manner. And the other question that we get a lot is how the financing markets are. How in the recession, really pretty much put a complete hold on financing for franchisees and for other restaurants as well. And since then, it's slowly come back. It continues to improve, but if you are a newer operator, or in some cases you need a mid-size amount of loans, in the $5 million range, it's still a little bit difficult in today's market to get that kind of financing. So that's the other issue that we get is who is lending and who's providing the financing.
So, Darren, let's talk a little bit about what both of you have touched on, which is that efficiency factor, because, I can remember back in business school, there's always that axiom that you can't expense yourself totally into profitability. At some point, you've got to gain more market share and grow those top-line sales. How does an operator in today's environment make that happen?
Well, I think the key here is to better manage your unit economics as a starting point. And the way a number of restaurateurs, franchisees, etc., have done this is to really maintain strict cost control over both labor and food, which are the majority of your costs. And in terms of labor, it means effectively staffing for peak times and, more importantly, non-peak times. With regards to food, it's not about cheating the customer out of an ounce of meat. It's about managing food effectively to reduce spoilage and reduce that cost. Beyond that, you get into some of the rents, and rent today, and I think Jonathan touched on this a little bit, is that when you're looking at franchising, the ability to get into these strip malls, to get the right size, to get into a strip mall where you're not competing with another restaurant, but ultimately to find an A location to be successful has become one of the biggest challenges today. With all the restaurants in the industry, franchises that are growing are still struggling for their franchisees to find locations to open and to build inside of. Now, when it gets down to growing your sales, we're seeing a lot more in terms of the four walls of the restaurants to raise spend when customers are in, local store marketing and guerrilla marketing tactics, which could include community nights where you bring people in, but you're also supporting the community by giving back a portion of your revenues and bringing people in, especially Monday through Thursday, which are going to be lighter visits for a lot of restaurants. So anytime you could be community involved, local store marketing, and really drive some of what's happening within, the 2 to 3 mile radius of the restaurant is a great opportunity to increase your sales, which is on everybody's mind today.
Jonathan, that was something that you touched a little bit earlier on. Do you agree with what Darren just spoke about?
Oh, yeah. Yeah, absolutely. And I think really, if you take a look at the best restaurant operators out there right now, the best performing concepts, they're really hitting. They're not really just hitting on just one thing. They're doing everything right. Probably the best operator out there right now, that in terms of from the chain's perspective, is probably Chipotle. They're the most profitable, easily the most efficient restaurant chain out there right now. And if you look at what they do everything right. Their food is made fresh right in front of people. But it's done it's done very efficiently. They do it very quickly. You may see they will always have long lines, but the customers know that if they are the 10th or the 15th person in line, that they're going to get through that line quickly. So, and it's done in its price point is still fairly reasonable in terms of what you get, and so they just hit it on all cylinders, and they also have a very strong marketing message. They do events. They just did an event here in Minneapolis where I live this past weekend, and so they really do. They don't just do one thing. It's not just about the food. It's about the way it's presented in front of the customers. They operationally, they are like super solid, and then they have a marketing message that really resonates with customers. And if you're going to succeed in today's market, you have to be very good at what you do, and you have to be very good. You have to give the customers what they want, or at least what they're expecting, and preferably more than what they're expecting. And you have to do it. You have to do it in a manner that they expect. If it's a dine-in restaurant, the service has to be really good. The environment has to be really good. If it's a fast casual or a QSR, it has to be quick and efficient. And then marketing really has to do its job to get customers in the door. Whether it's local store marketing, it's events like certainly like Darren mentioned. I know the Wisconsin brand Culver's does a very good job of having these community nights that just bring huge numbers of customers in the door. That local marketing really works and tends to resonate with customers. So you got to hit it on all cylinders, and you really have to do just kind of a good job at every level, because the market is super competitive right now.
See, and I would, as restaurant brokers, I totally agree with that message. I mean, those old days of the 90s where, everybody was going out to dinner and they didn't worry. You really have to be lean and mean and focused on cost to succeed. And I think, Darren, you were going to jump in there. You have some thoughts?
Yeah, and not every restaurant is created equal. And if we just are to look at the limited service side of the business, one of the bigger ones today would be Chick-fil-A. They do about $3.4 million breakfast, lunch, and dinner with a drive-through. Then you get down into where McDonald's and, to Jonathan's point, a Chipotle operate, which is about $2.5 million. Now, Chipotle does it with lunch and dinner, no breakfast, no late night, no drive-through. Whereas McDonald's, certainly 70% of the traffic generally through the drive-through, but still focusing on 24 hours in some case. So what Chipotle's done to build that speed of service is great. And then you look at brands like Subway that generally are under $500,000, so much smaller footprint. So I think, to Jonathan's point, block and tackling, effectively having service, food, cleanliness, all of those elements are going to be important to keeping your business, while marketing is still going to be relevant to bringing more business in through your doors.
And let's talk a little bit about the footprint itself, because I see that dramatically changing as we're helping people find lease space. As we know, those best possible spaces just aren't out there anymore. Are franchises, Jonathan, having to rethink what is an acceptable footprint for them and go from gigantic down to a more moderate space and turn out more in less?
You see that. You see more franchises today are much more flexible in terms of the kind of space they're looking for than they used to be. 10 years ago or less, they really, they were pretty inflexible. They wanted, they were requiring certain types of space, certain types of buildings, and they really wouldn't compromise that much. And now, now they are far more likely to they're going to okay smaller spaces. They're going to shopping center locations where they wouldn't have before. I mean, I've seen pictures of Burger Kings going into old Starbucks, for instance, and they are. You really see that a lot in a lot of these brands, newer concepts, where it enables them to maybe tweak it a little bit to go into different locations than they used to be. That's kind of a must in today's market. The real estate demands, particularly the demands for A sites. I mean, that's still a really top site right now is highly competitive, and it's not. And they're not that easy to get, and a lot of these franchises really really have to they really have to get creative with their concepts.
Well, that's the same thing we're seeing. Occupancy rates through the roof, and that's so competitive that people are having to buy out assets of a business that may not be doing as well in order to get into those prime locations.
Mm-hmm. Darren, right. Technomic recently published an article about the 8 crucial trends that will transform the industry within 10 years. And one of them was talking about greater focus on local. Can you elaborate a bit on that and kind of share with listeners what that trend is?
Sure. So we've seen a lot more in terms of the local coming to the surface. And it's a very broad definition. Often it can be defined as anything that's within 5 miles or 550 miles. So local is very broadly defined. But I think what we've seen in more of a local food movement is really focusing on the social and the economic elements of building around local farmers and local supply. So today, we're getting an aging farmer base, and we're not backfilling it. So the ability for local farmers markets and even backyard farmers are helping some of the local economies. From a consumer point of view, it reduces the carbon footprint. It's often thought of using local as supporting the economy as well as being fresh because it's closer. It doesn't have to travel as far.
Good.
So these are all positives, and they create emotional connections to a consumer that when price and quality and types of food are very even, the emotional elements are going to drive them towards loyalty or usage of one restaurant versus another. And with regards to local foods, it often means that they're raised in a way that's sustainable, which could be proteins versus produce. It means that you're oftentimes organic, less pesticides because of the way local is interpreted. And some of these carry a better for you, which results in a more realistic, this is healthier for me because of it. And Chipotle's done a nice job of focusing on supply chain. They also indicate that they are local when possible. So here in Chicago, when it gets cold in the winter, try and find local tomatoes.
Right.
It's very difficult.
Sure. Hey, Jonathan, what about from your perspective? Is this trend here to stay, or this is something that's going to kind of, weaken over time, or this is something that this is here and we're going to see this for a long time?
I'll admit I tend to be a bit more cynical on this, on the local food movement than a lot of people. Others, it's really, from a chain perspective, particularly from a chain perspective, it is very difficult to source local effectively. It's as much it tends to, in many cases, as a marketing aspect. I mean, there are some things that chains can do, and I think even a chain like Applebee's was able to do this with a by using Vidalia onions, which is just grown on a handful of farms in Georgia. So the local thing is tends to be, in my opinion, at least from a chain perspective, more marketing oriented really than it is realistic. From a local, that said, local sustainability type issues that Darren talked about is probably something that's here for a longer term, and I think Chipotle's sort of proven that out. But its success, certainly on the marketing front, is strongly related to its food culture. There's really no denying that, and if you look at a lot of the other chains, the emerging chains that are coming up, they're really doing a lot of the same things, and a lot of legacy brands are sort of scrambling beyond that, to sort of catch up. But so I tend to think a lot of it is here to stay. From a local standpoint, seems to be more marketing than it is realistic.
But that marketing, Darren, as you noted, it is kind of driving that consumer in a new and different way because they feel emotionally connected to the brand. So even if that local sourcing is more of a feel-good than a actual inaction can absolutely be sourced to within 5 miles or whatever of the restaurant, it's still succeeding with these restaurant operators, correct?
Yes, and I think a big part of being local is being seasonal and getting the right product at the peak of season, I think makes sense. And a brand within Darden's group, Seasons 52, has 52 different menus. They rotate every week, and they try and create a more seasonal offering where the food is less expensive and ripe. And a lot of it does relate to produce. But I think there are also effective ways of building in local into what you're doing. If you point to Five Guys, they have Idaho potatoes that are generally sourced on a whiteboard and bags of them that are sitting in the store that people can see, giving them strong freshness cues. We also see things like Wisconsin cheese appearing on menus well outside of Wisconsin. And in addition, Florida oranges. That's a great way to promote local being within the United States, being able to effectively do it. And I think for most restaurants, you have to figure out what you can and can't do, and there are ways of being local without necessarily being local.
I think that is absolutely a great place to leave this segment. That's some really wonderful information. We're talking to industry insiders today who are taking the pulse of the restaurant industry. They're telling us about the current business environment and pointing out long-term trends. We are joined by Darren Tristano of Technomic and Jonathan Mays of Franchise Times. Stay tuned as the restaurant brokers, Eric and Robin Gagnon, satisfy your appetite for acquisition, feed the need for restaurant reality, and serve up a recipe for business success. We're back right after the break.